What up, what up, what up, what up, what up, you two? Welcome back to another major market breakdown. Last week we got really exactly what we were looking for. We thought we were gonna get a push higher here on the dollar. That's exactly what we did get. Now I did think we'd start pulling back a little bit last week, but instead we got more of the push higher happening last week, and it just kind of consolidated most of the week and push higher like Thursday, Friday type. I was expecting it more to be like a Tuesday, Wednesday move, but it happens. Don't necessarily trade the dollar that much. We got some sells in here midweek for it. Now I was looking to take this opportunity to buy euro, but so much good dollar data came out last week that it's just not giving me incentive to actually buy against it. So U.S. dollar, I'm looking at more bullish type of moves. So I'm gonna be honestly looking for sell opportunities to take Euro USD downward. I would like to get a decent gold pullback, golden zone pullback, something around this little gap we have here. I'm pretty sure it's a FVG right there, if I'm not mistaken. Barely. I guess this would quantify here, but I think we'll get a slightly bigger pullback there. But we could be wrong. We're gonna watch when market opens. We're gonna see how high this decides to trickle higher to give us an opportunity to sell this down to this zone here we have marked on your screen. And once that closes below, then we'll be clear to go seek this opportunity down here. Now, granted, this is like an equilibrium point. Let me show you right here where this equilibrium point is. And this will be the same for EUR USD, GBP USD, AUD USD. Just about. This equilibrium point is probably going to give some stoppage and opportunities to get more entries on this trend. So as this develops, we'll be sending the platinum chat updates and making sure everybody's tapped in. Let's take a look at gold. Well, I like to have the futures up. I already have my futures chart for gold marked, so screw it. I actually took some silver. So we actually took some silver sells last week. Let me see if it's still marked up on my chart. We sold here. It's not still really everything's not fully still marked, but we ended up taking sells here right before price started breaking down. But let me just go back to my gold chart where I have everything. All my levels already marked. Come down to the 30 minutes so I can show you. I am looking for opportunities to sell any rallies on gold this week. We rally here. I might take a small sell position if it decides to butter through that. Then I probably won't try to sell again until we get to this level here. We'll see if bears decide to step back in again there. If not, then we'll take another stab here. And if that all just doesn't work out, then my whole bias for the week is wrong, and then we'll have to reevaluate and reset. But I am looking for more opportunities to sell gold here. Let's take a look at USD CAD. We got some good buys off of this drift higher last week. It went so. I was looking for I got TP'd like here, I think, but it just continued to drift higher. Let me get rid of that. We got a pullback and close on that level we broke out from. So like from here, I wouldn't expect USD CAD to go very much lower than this level here before drifting higher. So we'll be looking for opportunities to get in on this sometime this week. I would love to get a touch of this area here, bare minimum. I mean, it doesn't hate revisiting those levels though, even when it's this strong. Now, with all the data that came out last week, we know that Kevin Warsh, the new Fed chair, is not gonna be in the whole rate cutting camp. Like, I mean, he's in the rate cutting camp, but he can't just instantly cut rates just because he feels like it. The data has to support it, and the data is not supporting that. The data is actually supporting him and the Fed hiking rates in the coming 6 to 8 months, depending on how summer trading and geopolitics plays out. But inflation is sticky, but jobs numbers are decent. Our employment numbers aren't bad. I think we got an employment beat last week, if I'm remembering correctly. So just a whole lot of good things for the US dollar. So it just sends it higher. You know what I mean? It's like the Fed chair can't cut rates if data doesn't support it. So no matter how much we talked about it last year, no matter how strong the bias about it was last year, you're supposed to hang on loosely to strong opinions. Somebody said, I still can't remember who said that. I'm gonna type it into GPT and ask if like a philosopher or somebody said it. Or Perplexity. Perplexity is better at research. I don't know if you guys use chatbots in your daily life, but if you're noticing GPT getting worse, it's because they're directing you to worse models. So things like Perplexity and Grok are a little better for research purposes nowadays. Let's check out Nasdaq. We took a big old tumble straight to these levels we had marked out. Was it last week before last? I'm pretty sure in either last week's episode or the week before that. When Nasdaq does this tumbleweed thing, it starts busting off. I always end up saying something. It can be year round, but Nasdaq is 100% bullish. You won't hear me talk about like it really going into a sell market until it's about to do. And I'm not trying to just toot my own horn with that one, but hey, when Drippy say something about Nasdaq, y'all need to listen. I'm just saying. We keep putting these levels on the chart when it happens, when things happen, when we have these crazy historically down days or whatever. It's always like, oh, didn't Drip say that would happen? But when I said it was going to happen, I didn't say it as if it was some big, crazy, news event. It's just a matter of structure, liquidity, and fundamentals. You know what I mean? Not super Oracle-like. I just kind of know what I'm doing. You know what I mean? But I ain't going to lie. Any rally we get here on NASDAQ, I am looking to sell it. Like, I wouldn't say never, but for at least like a year, I've said we may get some sells, but I have not told you guys that I am looking to take a sell. Every pullback has just been an opportunity to buy for me so far, right? And this one, I'm not as confident in. We're just in a different market cycle that we were in, and I would love. Let me go on my 4-hour chart let me show you guys something. I would be ecstatic for some entries down here. This is where I start getting back interested in buys. I actually still have pending orders on a few accounts way down here. You know what I mean? Like this area, it gets a little nice, but I don't know. A lot of these gains right here, are I don't want to say fake, and I don't want to say inflated, and I don't want to use the word bubble. But it's like everybody's been really unsure during this rally, right? And it's been mostly based off a few really big companies doing good on the earnings side, right? Now, a lot of the other market is just, doing good, but it's just this has just been gassing everything. The AI the Nvidias, the AMDs, you just been kind of gassing the Nasdaq for a lot of this and all of this. You know what I mean? So if folks are like starting to reposition from a hardware stand, because that's what's really happening. Folks are repositioning from a hardware standpoint because the software and AI has gone past the point of profitability, and like it's essentially they're burning too much money because the hardware is not really where the software is. I don't want to go too deep and technical. I know a lot of you guys are just here for the trade setup, so I'm gonna keep it brief. Essentially, that discrepancy is causing people to diversify their money into other sectors, into that are going to benefit from AI. So it's not like the AI bubble is just popping. It's just the software part of it has been really heavily invested in, and that's where we've gotten into. And folks are starting to understand, okay, hold on, we need to really ramp up this hardware side of it so we can actually make some money from all this AI that we're building, right? So that's where I think all of this bearishness over the next probably month and a half, 2 month summer trading. All of the summer trading is gonna be the bearish environment, and I believe once summer ends, September, October starts to roll around, investors are really back in the office, liquidity starts pushing again, then we'll start going into more of a season like that. But I think it's gonna start getting really choppy. So any rallies from here, I'd like to sell just to have some sells up here. You know what I mean? Because I feel like right here it's just gonna be chop season. You know what I mean? So if we can get some sells, some low risk sells off of a rally, off of this bounce, that'd be great. You know what I mean? That'd be lovely. Let's go take a look at U.S. oil. Something interesting happened this week where oil sold off while the dollar was buying up, right? And as far as you guys probably know to this point, oil and the dollar usually are in pretty good lockstep because we're on a petrodollar system, but because of the fact that all of this is like the fact that prices are even up here is geopolitically driven, right? Which means it's not it doesn't have staying power like a true supply shortage, right? The oil's there, it's just not able to move around how it usually is because of all these geopolitical problems. With the US dollar, we're actually seeing like tangible things happen that affect the entire environment around it in a different kind of fundamental sense, like jobs numbers and inflation and interest rates and things like that. Whereas the U.S. oil, like is being flip flop, up and down based off of Trump saying a deal is happening or Iran saying a deal is not happening. You dig what I'm saying? So the factors are a little bit different, and that's why we're in an environment where the U.S. dollar and U.S. oil can move apart, and just this is a lesson for a lot, because it's not gonna happen a whole bunch of times, right? And so you guys got to really pay attention to the circumstances happening right now, so if this ever happens again, when this happens again, you'll be ready for it and understand it, and not get poop on your face from the market because you were assuming that the US dollar and oil were going to be in lockstep in a specific week when the conditions were saying that they may not. Now, it wasn't screaming this, but when we started getting that dollar news, on the same hand of them trying to bring up more talks about peace, Iran, sending delegations, talking about really just needing Israel to stop randomly bombing just the fact that there's discourse between us and Iran gives the oil market a little bit of a cap. Like, okay, we're not, it's not gonna get too much worse from here. Hopefully, at least, that's where the majority of the market is leaning, and that's part of why Nasdaq, bought up so hard in lieu of the fact that an international crisis was going on. So really just understanding, not just taking the chart for what it is. You gotta use tools like the bird's eye view tool. The bird's eye bands, the thing you see on your screen. It comes with a Markov probability, a Markov regime probability filter. So it kind of helps you understand from a math and historical standpoint, from what's already happened, what's going to happen next. So all the tools that we have here are literally built around making trading just easier for you. Like this right here, the bird's eye tool. I'm gonna come over here and type in AURUSD. Now, of course, the market's closed is going to give us a neutral momentum detected. We'll probably start seeing a reading pop up after market opens for a couple hours. But this is a completely free tool. You guys don't have to pay for it or anything like that. Just go to thebird'seyetool.com. Again, that's thebird'seyetool.com, and it's free to use. All right, and then if you guys want to get access to this indicator, it's in the link in the description. You guys can head over to our website and get access to that real easily. Just put it right there on your trading view chart, and it's there for whatever asset you want to trade. Now, I'll say we do send out some recommended assets and time frames to give you just a baseline of things that are going to be more potent and not as fundamental heavy, because they're just a little more chart specific, right? But when you use this in confluence with fundamental analysis, the bird's eye tool, things like that, you get a full story around it. And staying tapped into our ecosystem gives you that full story, as you can see. All right. Now, if you haven't already, make sure you hit that like button, sub button, and that bell icon. All that's going to tell the algorithm this is good content needs to get pushed forward, right? And if you guys have a specific asset you guys want me to go through, talk about, analyze, put in the comments. I read all the comments. No comment gets past me. So make sure you guys let me know. All right. I love y'all. Make sure you're kind to somebody. I'm going to catch you on the next one.